Hi. Later on in this video, I'm going to show you that contrary to popular belief, gold can pay interest and thus produce cash flow. And there's something very important also that's going to affect all of our lives. There's something fishy up with the Fed and a couple of its new programs. So getting into the main page here on goldsilver.com, yesterday I didn't cover the prices for the paper IOUs of gold and silver, but it was significant. Yesterday, gold closed over 1,700 and it has stayed there. And so we're over 1,700 for gold. The gold-silver ratio is still very, very high, favoring, for me, silver. I buy silver. I don't buy gold right now because I can't allow myself to, even though I have the inclination to buy gold during these times where you get a little, there's a lot of anxiety with what's going on right now, and it makes me want to buy gold. I just can't allow myself to do that when silver is so cheap compared to gold, and I know that one day it will catch up. That's my belief. You have to develop your own. So how government pulls coronavirus relief currency out of thin air. China's central bank to run simulations of digital currency use. This is our enslavement. This is the thing that we should be most afraid of right now. And because of coronavirus, because of COVID-19 and the anxiety and fear, this is what they're going to use to get us to go along with this kind of stuff. And at this point, they're going to be able to track everything that we do. And they'll just be able to put in, in code that you're allowed to do this and you're allowed to do that. And if you do the wrong thing, they'll be able to just switch you off as a person and completely freeze you out of the financial system. You won't be able to buy food, gasoline, pay your rent. You become a non-person the moment that the authorities decide. So this is the partnership between the Treasury and the Fed. The sell-off on Wall Street accelerates. Dow tumbles 700 points. Bank of Canada launches additional QE. So more QE coming for Canada. And the economy is clearly in ruins here. And so there's some important articles that you should read. And then, if you did not watch yesterday's video, this one's important. It's a little bit long, but it's about former Goldman Sachs, sort of a Wall Street insider, and his take on gold because he became converted over to gold when he looked at all of the evidence. So go and take a look at that video if you haven't already. Just in general, pay attention to what's going on. On the radar, Gold Telegraph. This is gold paying interest. The government of India, in consultation with the Reserve Bank of India, has decided to issue sovereign gold bonds. Now, these bonds are denominated in 1 gram increments, and the price of the bond is set by the spot price of gold the day that it's issued. And then those bonds pay 2.5% interest on the rupee price when the bond was sold. So you're getting interest, and then when the bond matures, hopefully, unless they figured out some other way of screwing us or screwing the Indian people, because as an American, you can't buy it unless you go through, I think there may be some funds or something that might have access to them in India. But the sovereign bonds will be issued in 6 tranches from this month through September. So it's investing in gold, and you're going to have the capital gain that gold has when the bond matures. You'll be able to either get your gold or sell the bond at that price, plus 2.5% interest every year on whatever your investment capital was denominated in rupees. So gold can cash flow. Jeffrey Gundlach says the Federal Reserve is presently acting in blatant noncompliance with the Federal Reserve Act of 1913. An institution violating the rules of its own charter is de facto admitting that said institution has failed and is fundamentally broken. And it is so broken. I'm going to do a special report later on on how badly it is broken, because the Fed is now throwing out the window some of the primary ways that it functioned since its inception until today. And just last week, they announced they're throwing these things out the window. And tomorrow, you're going to see some huge changes in the Fed reporting and so on. From Chris Martenson, Peak Prosperity, this is regarding the Fed's high-yield ETF buying defies explanation. It's hard to come up with any fundamental reason for the central bank's latest intervention. And it's buying into these high-yield ETFs, which they're bond funds, but high yield, that's corporate junk bond funds. So it's stuff that they normally shouldn't and wouldn't. Normally they wouldn't touch this with a 10-foot pole, but they shouldn't be buying this, but they are. And Chris explains it easy. The Federal Reserve is bailing out BlackRock's junk debt ETF, which is, they've got a bond fund that is a sinking ship, and several others, not to help companies gain access to hard-to-get credit, but to bail out their rich friends. Truly disgusting, and it is true. But when you look at the fact that the Federal Reserve is, all these programs that they come up with that have all these stupid acronyms, a couple of these programs are special purpose vehicles, and they're going to be administered by none other than BlackRock. And these special purpose vehicles, it's one of the articles on Zero Hedge speculated that the special purpose vehicle could be used to buy stocks directly in the market and support the stock market. So does this sound like, I'm not a conspiracy theorist, so I'm asking a question here of you. I don't want to put forward any conspiracy theories. I want to know what you think. And then you guys can do all the work. I'm not going down this rabbit hole. But this almost sounds like it has this aroma, this stench of a backroom deal, a double secret super handshake under the table type of deal where, we'll bail you out, but we want you to take over these two special purpose vehicles and run them for us. And with this one, you could buy, we can't buy stocks. That's illegal for us to buy stocks directly, the Federal Reserve. It's against our charter. But you might be able to through this fund, and we'll fund it. So you guys can speculate on that one and go down that rabbit hole. I'm not going to get involved with it. It may or may not be true. I'm not putting forward a conspiracy theory. I'm just saying that it's very interesting that BlackRock is going to administer some of these special purpose vehicles, and the Fed is doing this buying that benefits BlackRock in a big way. And then Tour Demister, I think it is, or Demister, I'm not sure. It worries me that, contrary to 2008, this market crash has not led to more interest in Austrian economics. And boy, this worries me too. Thank you very much for pointing this out, Tour. Maybe 2020s will be similar to the 1930s when populism reigned. And this was true. There was a big socialist uprising in the 30s, and the Communist Party got pretty big in the United States in the 30s. And Austrianism was deemed obsolete, and that's what happened in the 30s. And we also came up with a bunch of the social programs that weren't really very well designed that haunt us to this day. On the other hand, today there's the powder keg of Bitcoin and global inflation. And this is true. So I think, hopefully in the future this reverses. But this is Ludwig von searches for Ludwig von Mises, and he is considered the dean of the Austrian School of Economics. And then Murray Rothbard took over the torch for him. And then this is the searches for Austrian school. And it's just dwindling down to nothing. And it is very, very sad because what's happening is in colleges, Keynesian economics is what's being taught only. So I want to welcome the 1,030 new subscribers. Make sure you hit that notification bell when you subscribe. If you've already subscribed, go back and just hit that notification bell and click the thumbs up button if you could on these videos. The chart of the day, and this is from Morgan Housel. The NASDAQ is now higher than it was December 5 months ago. And so he's got a little mark here, and the NASDAQ is back up to December highs. And here's what's crazy about that. This was hypervaluation nosebleed levels. One of the best gauges of whether a stock is overvalued or undervalued is price to earnings ratios. And we're back up at these nosebleed levels again, where it's a hyper bubble. It never even went anywhere close to fair value. It's in a hyper bubble. And the first quarter earnings are going to come out, and that's January, February, March. Well, it wasn't until mid-March that economies started to shut down and stuff. So April, May, and June, that quarter is going to be the one with the really bad earnings report. PE ratios are the best gauge of whether a stock is overvalued or undervalued, and it's the price of the stock divided by the earnings that that company makes per share of stock. And so it's how many multiples are you paying in price over the earnings. And this is going to be something tragic when it happens. I think what's going to happen here, the stock market will do one more leg down, one more crash, and then the Fed will come in and start buying, and we'll probably have a melt up where the stocks may exceed their previous highs on all of these indexes. And but gold and silver will most likely be outperforming. They may lag for a little while because what's happening right now is all of these big funds and money managers and stuff, they are, whenever the Fed says something, they go and buy that thing, trying to front run the Fed. So whatever that thing is that the Fed talked about will go up even before the Fed goes and does any purchases. So the Fed is able to jawbone certain sectors, and they may not even go in and buy anything. It just goes up. So I want to get into the viewer feedback. Sam Lurie, I think this is. Thanks, Mike. I'm finishing a degree in finance and economics, and I have to say, I've been showing your Hidden Secrets of Money series to all of my friends. You explain incredibly complex systems very simply, not to mention your excellent market updates. They don't teach you about gold at university anymore. And it's great to have someone to give me all of the information for free instead of charging me thousands of dollars a semester. You know, they don't teach you about gold at university anymore. What they teach you about in economics is basically just Keynesian economics, and they don't teach you enough to really see the whole picture. They teach you just enough to go to work for a bank or Goldman Sachs. That's what they're teaching most people, is how to become Goldman Sachs employees. Danielle W. says, hi, Mike. No talk on silver today. Is everything okay still? Do you recommend continue to buy silver dollars? I have never recommended buying gold or silver. I don't believe I've ever recommended buying gold or silver to anybody. What I do is I tell people what I do, and the only thing that I recommend is continuing your own financial education. That is the most important thing. Satyajit says, Mike, please tell us what we should do. Nothing less, nothing more. Continue your financial education. I don't tell people what to do, sorry. But the thing to do here is get my book. It's free, and it's got so many different things in it as far as, I tell you what I'm doing in the book, but I don't really make recommendations. But one of the things it's got in there is who are you and what's your plan? Because for everybody, it's going to be different. Your risk tolerance. Do you want safety or thrills? And it shows you some of the different types of investments that you can go to. So you go there and sort of circle something that sort of fits you. your involvement. Do you want to not be involved, or do you want to be a day trader and be involved every hour of every day? Reasons for investing. Do you need income or future wealth? How long do you have left? I mean, are you old or young? Because that determines a lot of what you're going to do, whether or not you need income or future wealth also, and your portfolio size. This is all available in this book, and along with a bazillion other things that are going to help you. So the quote of the day, the meme of the day, how government works. First, it breaks your legs, then it sells you a wheelchair at 10 times the actual cost. It taxes that wheelchair, it regulates your use of the wheelchair, and it assures you that without government, you wouldn't be getting around so well. I want to thank you for watching this. We'll see you next time.